Hey traders, Raghee here. And as we follow up on the heels of last night's webinar, thanks so much for those of you that attended. The question that I'm getting the most on the heels of that is, what do we do with today's rip? Rag, because in certain pockets of this market, you're telling us that we can be a buyer, but in other pockets of this market, based upon that sector view, we know that there is weakness. And I'm here to tell you, today's move changes none of that, because these are not twitchy, short-term, intraday analysis points that we're talking about. Remember, we're focused on daily time frames. So when you're focused on the daily time frame, and we're taking a look at the daily time frame of the NQ. So of course, think QQQ, think XLK, think XLC, think XLY, right? That's everything that you think about when you're looking at the NASDAQ futures. Because we're not looking at twitchy short-term analysis, which is fine, right? We're looking at a daily time frame. This kind of move is not going to suddenly change the overall complexion, the overall structure of the market. Take a look at the JT multi down here. Looks exactly like it did the day before, the day before, the day before, the day before, because larger, longer duration, daily time frame analysis is not going to change that quickly. So first of all, there's no reason to freak out. Second of all, this was actually terrific. When you see an up move, immediately ask yourself, not where do I want to buy? We'll talk about how to build long watch lists and short watch lists on the class on Saturday. You will be a watch list building master. But when you see a market move higher like it did today, don't look at where you want to buy, look at where you want to short. So on a day like today, big move in the NASDAQ. On a day like today, big move on the S&P. It's not a matter of whether or not the S&P is going to fatigue here. By the way, yes, I'm still pretty darn bearish in terms of moving higher into resistance and fatiguing, but we go down to the sector level. So think XLV, think XLC. This is how we transition to the relative outperforming structure of, well, where is the downtrend? Notice that the move higher today in XLC, still nice and steady. That's what daily time frames give you, that steadiness, that ability to look at the market and determine session after session, have we really changed that much? And remembering that dailies are not going to be upended typically in a single session. It's much more slow paced, which is great. That's why we can focus on this about an hour a day, right? What about XLY? Now here's a different look at this. Look at the previous high. Do you think we're just going to blast through that high, or there might be some sell orders waiting there? I think you know there's going to be some sell orders waiting there. What about a market like XLK? Well, it's really not anywhere, is it? So don't get carried away with the move. Think about where the move carried price action to. Put XLV on the radar, put XLC on the radar, and even XLI. Previous high, right back at that high. What am I expecting? Yeah, I would look for some fatigue here. So this is what we're doing when we're breaking down the broader indices, which are in chop, into those individual sectors, okay? All right, so as always, make sure you make some time to catch Charts and Coffee if you have some questions for me. 9 a.m. at the Simpler Trading YouTube channel. And the class is this Saturday, October 16, 1 p.m. Absolute deep dive immersion in how we use sectors to dissect, to decode this market. It's the ultimate hack in chop. So you can check that out at simplertrading.com/extract. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.